Good morning, everyone. Um, Thank you for joining us on the Vetiva breakfast meeting today. Today we'll be hearing from our junior economist, Ibuku Omoyeni, on the recently released inflation numbers. Also, we'll be getting the rundown of the equity and fixed income markets, as well as West African updates or Pan African updates from our media partners at Frontier Africa Reports. Before we get to those, we'd like everyone to note that the meeting is being recorded and the recording may be shared with third parties. We'd also like you all to note that the session is being broadcast live on Facebook on our Vetiva online Facebook page. Furthermore, if the session is supposed to last for only 30 minutes, and if we're unable to, and that would include questions, but if we're unable to get to your question, you can always send us an email of your questions to research@vetiva.com. So today's presentation will be starting with the inflation reports analyzed by Ibuku Omoyeni. Good morning, Ibuku.
Good morning, Chima, and good morning to everybody. So yesterday, we witnessed another rise in headline inflation to 18.17%. This makes it the 19th consecutive rise in inflation to a new 4-year high, as the side effects of the pandemic still lingers. So we regard the weakness in the naira as well as higher pump prices as the major inflation drivers. So food inflation rose to 22.95% as insecurity in food producing regions continued to trickle down to food prices. Although it was brief, we believe that the twin shocks from the hike in fuel price and the food blockade contributed to the unrelenting rise in food inflation. So core inflation, which captures non-seasonal items, was also affected, and it rose to 12.67%. And this was also due to the same underlying drivers, which is currency depreciation and the reforms in the energy sector. So in the coming months, we see inflation rising further to 18.92%. So the key highlight for the month is the combined effect of Easter and Ramadan festivities. We also see the Naira for dollar policy as another source of demand pull inflation. In addition, pump prices would actually be contributory in driving inflation higher in the current month. So we recall that pump price of PMS was reduced to 124 naira per litre a year ago. So despite the recent decision to sustain PMS prices at the current levels for the next 6 months, we believe that this low base effect will actually drive inflation higher in the near term. So that concludes it for inflation this morning.
Thank you very much, Ibuku. Next, we'll be hearing from Sheung on the equity market. Good morning, Sheung.
Good morning, Chima, and good morning, everyone. We'll start off in Ghana as the GSE index sustained positive close with a 14 basis point gain, largely supported by 7.81 and 0.91% gains in Cowbank and FANUC Limited, respectively. Investors continue to pour in funds into MTN and Cowbank on the back of dividend declaration in Cowbank, as both counters have emerged as the top traded stocks for 4 consecutive trading days. We expect the last trading session of the week to remain positive, with market following similar pattern in that market. In BRVM, the index closed higher by 91 bips. We saw a negative market breadth with 13 gainers and 15 losers. Though market activity increased as volume and value traded improved by 230 and 82% respectively. With gains recorded in the last session, the year-to-date return moderated to negative 1.14%. In today's session, we expect sentiment towards the market to remain positive to further reduce the year-to-date loss. Then moving down to Lagos, the NSE All-Share Index couldn't sustain yesterday's positive close as sell-offs in banks dragged the market in the quiet session. UBA, Zenith, GTB all contributed to the red close as investors took profit on recent gains in the sector. Guinness continued on his impressive run with another 10% upward close, just as Dangote Sugar also closed up 182 bips to push the consumer goods sector to a positive close. In terms of market activity, this was mixed again, as we saw volume improve by 15%, while value traded decline by 22%, which is just in line with our expectation for the market. Banks, also as expected, dominated the activity log as the sector accounted for over 55% of turnover, as we saw crosses in Fidelity and Dan Sugar also in the session. So going into today, which is the last trading session of the week, market will play out the pattern we have seen all through the week, with a quiet session that will be dominated by the banks. Market should close the week in the red, barring any major movement in large cap name, as investors remain on the sideline, awaiting catalysts to drive further activity. That'll be it for the equities market. Thank you, and do have a profitable day ahead.
Thank you very much. Next, we'll move to the fixed income market, where Omarigi will take us through a rundown of events. Good morning, Omarigi.
Good morning, Chima. Good morning, everybody. So I'll start with the money market. System initially opened about 11 billion positive yesterday, but was later thrown into negative by NTB auction of an additional amount of about 83 billion. So as a result, system figure was around 72 billion negative. So despite the FS retail refund that came into the system yesterday during the course of the trading session, money market rate tightened to trade between 14% to 17% from around 12% levels that was recorded on Wednesday. The increase in money market rate was largely due to the extremely tight system liquidity and the increased funding pressure as market players had to make provision for the OMO auction debit that happened yesterday. So our expectation for today is that the money market rate will trade at higher levels on the back of the anticipated CRR debits that will happen today and the FS retail auction. So I'll move on to the FS market. So despite a significant increase in turnover yesterday by about 430%, the parallel market remained stable to trade around 482 Naira to $1, while the earning window traded at a high of 437.62 Naira to $1, closing at 410.50 Naira to $1. So the if industry turnover figure for yesterday was about $116.16 million, coming from the $21.92 million recorded on Wednesday. Our expectation is that Naira will continue to trade at these levels. Moving on to the T-Biz market, the Treasury Biz traded on a very active note yesterday, with the long end OMO papers inching up by about 20 basis points on an average, while the NTB papers shared about 30 basis points relative to NTB auction stop rates. The newly issued one-year paper traded around 8.7 levels in the secondary market. Offers for the special papers also act by over 20 basis points to trade above 6.50%. In the previous trading session, it was trading around 6.3%. So this was largely due to players reacting to the one-year NTB paper closing 100 basis points higher at the NTB auction on Wednesday. So CBN conducted an OMO auction yesterday where they offered 20 billion, the same amount that matured on Tuesday across the three tenors. The short end maintained to close at 7%, The total amount on offer on there was 5 billion. The subscription was 18.37 billion. The total amount that was sold was also 5 billion. The median maintained to close at 8.5%. The total amount that was offered on that end was 5 billion. Subscription was 16.03 billion, while the total amount sold was also 5 billion, while the long end also maintained to close at 10.10%. The total amount on offer on that end was 10 billion. Subscription was 57.84 billion, while the total amount allotted was also 10 billion. So our expectation today is that the T-bills market will close the week on a very active note as players try to offload their NTB winnings, while we also anticipate that others will try to cover their on-feed demand at the OMO auction because players got prorated volumes at the OMO auction. So I'll conclude with the bonds market. In the bonds market, we saw the bearish momentum which has characterized the bond market for a large part of this week intensify as players traded post-NTB auction sentiment. The bearish momentum was also driven by the general anticipation of a continuous spike in rates in the interim. We saw demand across the benchmark curve from the 2023 maturity to the 2045 maturity as players tried to take advantage of the attractive offers in the market. We saw some trades consummated on the 2023 maturity at around 10.25% levels, while we also saw investors cherry-picked offers on the 2045 paper at around 14% levels. So our expectation for today is that the bonds market will close the week on a bearish note as investors continue to trade post-auction sentiment. That'll be all for fixed income. Thank you very much.
Thank you very much, Omarege. So now we'll hear from our media partners at Frontier Africa Reports. Today we'll be hearing from Boston. Good morning, Boston. Hello, Boston, your mic is still muted. All right, it appears that we have some technical difficulties reaching Boston, so we'll just move straight ahead to question.
Hello, good
Hi,
morning.
Boston. Good morning.
Hey, can you hear me?
Yes, we can.
Yes, thank you very much. I think
But there's some noise in the background.
Hello, sorry.
Okay, that's fine now. We can hear you.
One of the big stories we pursuing came yesterday from the IMF African Economic Outlook report, which was released with the outlook for sub-Saharan Africa growth for about 3.4% for the year 2021. There's a whole lot more details in there, and everyone can just lay hands on it and get some of the regional outlook for West, North, East, and Southern Africa, as the case may be. Again, we're wrapping up the week, and quite a number of earnings are coming through from the various markets. In East Africa, Jubilee Holdings, which is a big financial services company, reporting improved profit after tax of 2.5% for last year. That was a little bit of just crossing the line, as it were, in terms of earnings, because it was really largely very tough for the Kenyan banks within the last financial year, which was 2020. Stanbic Bank in Botswana reported a total income decline of 5.1%. This was the largest bank listed on the Gaborone Stock Exchange, 1.08 billion Puila for last year in terms of local currency. Then Zimbabwe, the authorities are looking at penalizing some telecommunications and banks that are accused of profiteering from the FX market. A few months ago, late last year, Zimbabwe set up a new interbank FX market on a daily basis. The whole idea is floating the new Zimbabwean dollar against the US dollar. But the authorities are accusing some of these companies of profiteering in the new interbank FX market. Some big names such as Old Mutual had previously been accused, and that had led to the shutdown of the Zimbabwe Stock Exchange for a couple of weeks last year, and that seems to be rearing its head right now once again. Within the North African corridor, Tunisia was reporting a food trade balance record of about 251 million dinars deficit for the first quarter of this year. There's a whole lot of specter of shortage of food production, globally speaking, and prices are rising. If you look at the US Department of Agriculture and the World Food Program, they're reporting numbers on a weekly basis of a pressure that is coming because of the COVID-19 and the impact it's had on logistics, agriculture, inputs, travel, and all that in terms of how the output. So it's beginning to show up, even as we see in food inflation, such as in Nigeria. Afrexim Bank is moving on towards the enthronement of the payment system, clearing and settlement for the new intra-Africa trade, which is in conjunction with the West African Monetary Institute. $3 billion is what Afrexim Bank has promised to put on the table to support this project, which is based in Ghana, in Accra, Ghana, to support it because of the headquarters of the AFCFTA in Accra. So the payment system is there. They're working with some banks and working with the West African Monetary Institute to use West Africa as a pilot project for the PAPSS. And that is one news that we're following also very closely to see how this come up. They give April this year as the deadline to get it started. And we hope that this will happen. The president of Afrexim Bank, Benedict Orama, Dr. Orama, was in Accra last month or so, and he spoke about the updates and the progress that has been made so far within that particular period. Within the French-speaking West Africa, Burkina Faso and many other states are raising our bills and bonds and stimulus bonds within the period. Burkina Faso reporting 33 billion CFA franc raising its bond, which was a treasury bond, which was floated, was overbought nearly 400%. So the whole market within the UMOA is very, very active as we speak. We saw the central bank yesterday, and their team went to Dangote local sugar farms in Nasarawa State, and the whole soundbite from the central bank governor was that there will be measures very soon to stop local banks from giving FX for importation of sugar as well as wheat, because they're looking at the combination of what Dangote Sugar, Boa Sugar, and Flamis are doing to make local production sustainable, but we don't know when this will likely happen, because between Dangote Sugar and Boa, with the facilities being built in Nasarawa and Lafiaji in Kwara State, both are not likely to be fully operational until at least 2 years' time. So this restriction of FX on sugar and wheat importation is not likely something we'll see in the interim, just to keep that in mind as well. Thank you very much. That sums it up for us at Frontier Africa Report this morning. Thank you. Have a great weekend, everyone.
Thank you very much, Boasin. We can take questions now. So if you have any question, please raise your hand or send your questions using the chat or Q&A boxes, respectively. That's if you're joining us from Zoom. Or if you're joining us from Facebook, you can send your questions in using the comment section. I have a question for Boasin. So you mentioned yesterday that the IMF was going to be releasing a report on Africa's economic outlook, and looking at a snippet of the report they released yesterday, there's a projection for about 2.5% growth in 2021 for Nigeria. But that is also hinged on the expectation that, or the need for many countries in this part of the world to up their budgets for health by about 50%, which I don't think was considered in the last budget. Although I know that there was supposed to be a supplementary budget when the conditions or constraints around the vaccination were made clear. And I know that some House or Senate members have met with the president concerning the supplementary budget. But I guess my question is, Is there any updates regarding this, especially in light of this recent report? Hello, Basim.
Yes, I was asking, Chima, I was asking if the question is on budgetary or fiscal space or COVID-19 impact on the outlook for Sub-Saharan Africa.
I guess it's on budgetary plans in terms of funding for the vaccine. So I noted that the report said that countries around Africa would have to up their budget, their spending on health by about 50%. So I
Yes.
know that that's not really what happened with our budget. And I know that there was some plans around having a supplementary budget in March. And I know
Yes.
that there has been a meeting concerning that, but I was just wondering if you had any updates for us, any other news regarding that.
Oh, that's clear. Thank you so much. A few countries like South Africa has increased their budgetary allocation for COVID-19 support because again they've had the highest number of infestations and fatalities on the continent, so to speak. But again, that number is changing a little bit gradually, a little bit lower for South Africa, and everyone is happy that the level of rates of debt and all that, and that would be a good one for the economy. The $2 billion that the African Bank put in place is also there to support the 54 African states. On a country-by-country basis, this will have to be done within the fiscal authorities. Right now, Nigeria hasn't come up with any extra announcement or plans to increase the rate. I think the authorities in Nigeria are hoping and praying both ways that somehow the virus will not go exponential as everyone initially thought, and they will be able to scale down a little bit, maybe go more around prevention and all of that, make sure we have contact tracing and a whole lot of that. But in terms of importing and buying the drugs or the vaccines fast and furious, it's not happening right now. It's good to have the vaccinations and inoculations, but there's a whole lot of pressing needs for African states, as it were, including Nigeria, to spend money on. We want to open the economies back very quickly. The banks are not looking good. Businesses are not looking any real good, as it were. Transport, hospitality, tourism, air travel are all in trouble. So when you look at what the new funding from the IMF and the World Bank, 500 million that Kenya is looking for, is all about to support the economy a lot more than to support the purchase of more vaccines. So generally speaking, for Sub-Saharan Africa, I can wrap it up by saying that, look, we're fortunate to have lower infestations and spreads like in other parts of the world. If you look at some of the reports on Bloomberg, we've been very fortunate in terms of this particular virus. So to that extent, authorities are looking at how to balance the fiscal space and make sure that the economies come back. Again, looking at the pressure that will be coming from commodity-dependent economies, such as those depending on hydrocarbon, for example, then a bit more, a little bit less on those in mineral resources like gold, platinum, aluminum, and the rest. South Africa, Botswana, diamonds, and what have you, Zimbabwe, Zambia. It's a whole lot of pressure. Agriculture would do a little bit better. So the extraordinary policy support that is driving recoveries is not what everybody wants to see happen in Africa. You see how the US economy is coming up very fast and furious. Regional Africa is down. So the vaccine, we need it. But again, if you ask any African states, where would they spend money on? Yes, they want to spend money on television. They'll tell you they want the COVID-19, but backdoor, they want to get the economy up and running, because at the end of the day, it's about the economies, by the way, and that is the way it really works. That's what we know for now. Thank you very much.
Thank you very much, Basim. I see that we have a question from Godwin. He's asking, what is responsible for the uptick seen in Guinness's share price? I'll leave that to Sheil to answer.
All right, thank you for that question, Godwin. If you look at it, prior to now, I think about 3 weeks ago, we saw decent upside in Guinness. We saw most like we mentioned, foreign investors were pouring in into that name. Then I think for about 5 or 6 consecutive trading days, the share price moved up to about 50 up to about 40%. Then later on, we also saw some profit taking in the name, which pulled down the share price from around 36 naira to about 24 naira, 24.10 specifically. So after then, we saw again investors going into the name, and that's what we're seeing in the name. We believe largely is just we're seeing a few investors, foreign investors largely actually moving out from rotating from some names. And we're seeing a bit of sell in international bureaus, and we are seeing those funds roll into Guinness. So maybe investors that are looking at maintaining their holdings in the brewery sector, trying to get out of international breweries and rolling and rotating into Guinness. So that's what we've largely seen in the market for Guinness, and that's what we've seen in that optic that we're seeing in the net. I'm sure we'll also start seeing some correction maybe after another 1 or 2 trading session. Some correction in the name after about another 1 or 2 trading session. Thank you.
Thank you very much, Young. I hope that answers your question, Godwin. I don't think we have any other question for us today. So in light of that, we'll be ending this session here. We thank everyone for joining this session today. We hope that you have a wonderful day and weekend ahead. We also hope that you'll join us on Monday at the same time. Thank you for joining.